Most traders lose money in the market not because trading is impossible, but because they use indicators the wrong way. They jump into trades without understanding what the indicator is really telling them. In this video, I'm going to show you a simple MACD strategy designed especially for beginners. This strategy focuses on clarity, patience, and risk control. You do not need multiple indicators. You do not need advanced price action knowledge. You only need to understand how MACD works and how to apply it correctly. This MACD strategy can be used in forex, cryptocurrency, and index trading. Before we jump into the strategy, let's clearly understand what MACD is. MACD stands for Moving Average Convergence Divergence. It is a momentum and trend following indicator. MACD helps you understand two important things. First, the direction of the trend. Second, the strength of that trend. The MACD indicator is made up of three parts: the MACD line, the signal line, and the histogram. The MACD line reacts faster to price movement. The signal line reacts slower and smooths out the movement. The histogram shows the distance between the MACD line and the signal line. When the histogram grows, momentum is increasing. When it shrinks, momentum is weakening. Now let's set up the MACD indicator. Use the default settings: 12 for the fast-moving average, 26 for the slow-moving average, 9 for the signal line. If you're new to trading, do not change these settings. The default settings are already optimized for most markets and timeframes. Now let's move to the strategy itself. The most important rule of this strategy is trading with the trend. Many beginners fail because they try to catch reversals. Instead of predicting the market, we will follow it. For buy trades, price must be above the 50 EMA. This confirms that the market is in an uptrend. Once price is above the EMA, we wait patiently. We do not rush into the trade. Now look at the MACD indicator. A buy signal happens when the MACD line crosses above the signal line. This crossover shows that bullish momentum is entering the market. At the same time, the histogram should turn green. This confirms that momentum is shifting in favor of buyers. Do not enter immediately when the lines touch. Wait for the candle to fully close. Entering after candle close reduces false signals. Once the candle closes, you can enter the buy trade. Now let's talk about stop loss placement. Stop loss is not optional, it is mandatory. For buy trades, place your stop loss below the most recent swing low. This level represents where buyers previously defended the price. If price breaks below that level, the trade idea is no longer valid. Now let's set your take profit. Your take profit should always be larger than your stop loss. Aim for at least a 1-to-2 risk-reward ratio. This means if you risk $10, you should aim to make at least 20. This allows you to be profitable even if you lose some trades. Now let's look at sell trades. For sell trades, price must be below the 50 EMA. This confirms a downtrend. When price stays below the EMA, sellers are in control. Once again, patience is key. Wait for the MACD sell signal. A sell signal happens when the MACD line crosses below the signal line. The histogram should turn red. This shows that bearish momentum is building. Wait for the candle to close before entering the trade. Never enter in the middle of a candle. For sell trades, place your stop loss above the most recent swing high. This protects your account if the market moves against you. Set your take profit with at least a 1-to-2 risk-reward ratio. Now let's talk about time frames. This MACD strategy works best on higher time frames. The 15-minute, 1-hour, and 4-hour charts are ideal. Higher time frames provide cleaner signals and less noise. If you're a beginner, avoid very low time frames like 1-minute or 5-minute charts. They can cause emotional trading and overtrading. Now let's discuss common mistakes beginners make with MACD. The first mistake is trading every MACD crossover. Not every crossover is a good signal. Always confirm the trend first. The second mistake is ignoring risk management. Even the best strategy fails without proper stop loss. The third mistake is overtrading. More trades do not mean more profit. Quality trades are more important than quantity. Before using this strategy with real money, backtest it. Use a demo account. Scroll back on the chart and practice identifying setups. This builds confidence and removes fear. Remember, trading is not about excitement. Trading is about discipline, patience, and consistency. This MACD strategy is simple, but simplicity does not mean weakness. When applied with discipline, it can be very effective. If this video helped you understand MACD better, support the channel by liking the video. Subscribe for more beginner-friendly trading strategies. And comment MACD if you want a second video covering advanced MACD techniques like divergence. Thanks for watching, and always trade smart.